Okay, so you know how sometimes you watch the market open and you feel like, whoa, what just happened?
Yeah.
Like you're already behind before you even start. Well, that's exactly why pre-market preparation is so important. And that is what we're going to dive into today. Think of this as like your blueprint for building a killer pre-market routine so you can start every trading day with a clear edge. We're going to unpack some really insightful points from the Trading Mindset Mastery podcast, specifically from an episode called Pre-Market Preparation, Building Your Trading Day Blueprint.
Yeah, they say that trading is a game of inches, but I'd argue that pre-market prep is where you actually gain those inches. You're shifting from reactive trading to proactive trading, where you're not just chasing the market, but anticipating moves and executing confidently.
So it's not just about avoiding losses, it's also about maximizing your wins by being prepared.
Absolutely. And one of the most important aspects of pre-market prep is understanding the broader market context. Think of it like this. You wouldn't jump into a conversation halfway through without knowing what's already been said right. Well, the same applies to trading. You need to grasp the mood of the market before that opening bell even rings.
Okay, so how do we actually do that? Where do we even begin?
Well, the first step is to review the news, but not just skimming headlines. We need to go deeper than that and identify news that directly impacts the market, or even more specifically, the assets you're interested in.
Okay, so instead of passively scrolling through a news feed, we need to actively search for information that's relevant to our trading decisions.
Exactly. So let's say, for example, you're watching Apple stock. You'd want to check for any major news ahead of the market open, like earnings reports or analyst ratings or even just rumors about upcoming products. Those little nuggets can give you a serious edge.
So we're talking about connecting the dots between seemingly unrelated events and understanding how they could potentially ripple through the market.
Exactly. Let's say there's a news report about rising inflation. That might lead you to believe that the Fed could raise interest rates, which could then impact the performance of certain sectors like tech or real estate. It's all about anticipating those chain reactions.
That makes total sense.
Mhm.
I'm starting to see how pre-market prep can turn you into a market detective. But let's be realistic for a second. There's a ton of news out there. How do we avoid getting bogged down in information overload?
That's a great question. One way to avoid that is by curating your news sources carefully. So instead of relying on generic news aggregators, you might consider subscribing to industry-specific newsletters, or following reputable financial analysts on social media, or even using specialized news platforms that cater specifically to traders.
So it's about quality over quantity, finding those trusted sources that consistently deliver insightful and actionable information.
Exactly. Now, once we have a handle on the news, the next step is to analyze the futures market.
Okay, now I've heard of futures, but I'll admit I'm not entirely sure how they work.
Sure, so basically futures are contracts to buy or sell an asset at a predetermined price in the future. But here's the key. They trade 24 hours a day, which gives us a glimpse into market sentiment, even before the regular trading session begins.
So it's like getting a sneak peek
Yeah,
behind the curtain to see how the market might react when it opens.
exactly. So for example, let's say you see a big gap up in futures for the S&P 500. That could be a sign that traders are feeling bullish, and they anticipate a strong market open. Conversely, if you see a gap down, that might suggest bearish sentiment and a potential market decline.
So futures act like a sort of early warning system, giving us a heads up on potential market movements.
Exactly. But it's not just about the overall direction of the market. Futures can also give you insights into specific sectors or even individual stocks. So for example, let's say you're watching Tesla. You might notice that Tesla futures are trading significantly higher than the previous day's close. That could suggest some positive news or anticipation of strong earnings, giving you that early edge.
This is really eye-opening. I'm starting to realize how much valuable information is hidden in plain sight, if you know where to look.
Absolutely. And that brings us to the next crucial step, which is identifying key levels. This is where technical analysis comes in. And it's all about pinpointing those support and resistance levels, as well as potential breakout zones.
Okay, I gotta admit I'm a little rusty on my technical analysis. Could you give us a quick refresher on support and resistance?
Of course. Think of support like a floor for prices. It's a level where buying interest tends to be strong enough to prevent further price declines.
So if a stock is approaching a support level, it's more likely to bounce back up than break through to the downside.
Exactly. Now, resistance is the opposite. Think of it like a ceiling. It's a level where selling pressure tends to outweigh buying pressure, making it harder for the price to move higher.
So when a stock hits resistance, it's more likely to stall out or even reverse direction.
You got it. Now, these levels aren't set in stone, but they act as important markers that can help us anticipate potential price movements.
Okay, that makes sense. But how do we actually identify these levels in practice? Are we talking about specific numbers or patterns on a chart?
Great question. Identifying key levels involves looking for historical price points. Where the stock has either bounced off or stalled out in the past, you'll often see these levels forming around round numbers, or previous highs and lows, or trend lines that connect multiple price points.
So we're looking for those telltale signs
Hmm.
of where buyers and sellers have battled it out in the past, which could give us clues about future price action.
Exactly. Now, once we've identified these key levels, we can start to anticipate potential scenarios. So, for example, let's say a stock is approaching a resistance level. We might anticipate a pullback or even a short selling opportunity. If it fails to break through,
Fascinating. It's like having a roadmap of potential price movements, helping us navigate the market with more confidence.
you got it. And that brings us to another important step, identifying breakout zones.
Okay, tell us about those. What are breakout zones all about?
These are essentially areas on a chart where the price has the potential to make a significant move, either up or down. It's like the stock is coiled up, ready to spring in one direction or another.
So it's like a pressure cooker, waiting to explode. How do we spot these breakout zones?
Well, often they're formed when the price is consolidating between support and resistance levels, like it's trapped in a range,
Hmm.
and building up energy for a breakout.
So we're looking for those areas where the price is kind of getting squeezed
Mhm.
between those support and resistance levels, like it's ready to burst free.
Exactly. And once that price breaks out of that range, it can often lead to a powerful and sustained move in that direction.
So if we can anticipate these breakouts, we can potentially ride that wave of momentum and capture some nice profits.
Precisely. Identifying breakout zones is all about anticipating those big moves before they happen, putting you ahead of the curve.
This is all starting to come together. We're gathering crucial information from the news, analyzing futures for early signals, pinpointing key levels to anticipate price action. But how do we take all this information and actually apply it to our trading decisions?
That's a great question. And that leads us to the next stage of pre-market preparation, building a watch list. Building a watch list.
Right. We've gathered all of this valuable information from the news, from futures, from technical analysis. Now we need to narrow our focus and figure out which specific assets we're going to actually track during the day.
And this is where things can get a little tricky for some traders, because you might feel tempted to monitor dozens of stocks, or even entire sectors, thinking that more options equals more opportunities. But actually, spreading yourself too thin can be really detrimental to your trading performance.
So less is more. It's about quality over quantity.
Exactly. Instead of trying to keep tabs on everything at once, focus on a select few stocks or assets that meet your specific criteria and align with your overall trading strategy.
Okay, so how do we choose those select few? What factors should we be considering when building our watch list?
Well, first and foremost, consider the news and events that we talked about earlier. Are there any companies releasing earnings reports that day? Are there any economic data releases that might impact specific sectors?
Right, because those events could create a lot of price volatility and potential trading opportunities.
Absolutely. Next, you want to think about the technical analysis we discussed. Are there any stocks approaching those key support or resistance levels? Are there any potential breakout zones forming?
So we're looking for stocks that are showing signs of potential price movement, either based on fundamental news or technical patterns.
Exactly. And another factor to consider is your own personal risk tolerance and trading style. Are you more comfortable with volatile growth stocks or more stable blue chip companies? Do you prefer short-term trades or long-term investments?
Right, your watch list should reflect your individual preferences and your own risk appetite.
Exactly. It's about creating a watch list that's tailored to your specific needs and goals.
Okay, so we've narrowed down our list of potential candidates based on the news, technical analysis, and our own preferences. But there's still one crucial element of pre-market prep that we haven't touched on yet.
You're right. And that is setting goals and limits.
This is where we shift from preparation to strategy. We're not just gathering information, but actually defining how we're going to use that information to make smart trading decisions.
Exactly. Before you even think about placing a trade, you need to define what success looks like for you that day.
So we're talking about setting clear profit targets.
Yes, but it goes beyond just the financial goals. It's also about setting strategic goals. Like, are you aiming for a certain number of winning trades? Are you focusing on a specific trading strategy, like scalping or swing trading?
Right, because those goals will shape your decisions.
Exactly. And just as importantly, we need to define our limits.
You mean setting stop-loss orders to protect ourselves from big losses?
Yes, stop-loss orders are crucial. They automatically sell your position if the price drops too low, limiting your potential downside. But setting limits is also about controlling your emotions.
Oh yeah, I can see how that's important. It's easy to get caught up in the moment and make impulsive decisions.
Exactly. So before you enter a trade, decide how much you're willing to risk and stick to it. Don't chase losses or let your emotions get the best of you.
So we're setting boundaries, both financially and emotionally.
Precisely. And having those predefined goals and limits in place can make a huge difference in your trading performance. It helps you avoid those impulsive decisions, manage your risk effectively, and stay focused on your overall strategy.
This is all incredibly valuable information. It's like we're building a solid foundation, brick by brick. But let's be honest, all this prep work can seem kind of overwhelming, especially if you're new to trading. So how do we actually incorporate it into our daily routine without feeling completely overwhelmed?
That's a great point. And it brings us to our next topic, developing a consistent morning routine.
Ah, yes, the power of routine. I've read so much about how successful people in all walks of life, from athletes to entrepreneurs, swear by their morning routines. It's all about setting the tone for the day and priming yourself for peak performance.
Absolutely. And in trading, a consistent morning routine can be really transformative. It helps you build discipline, eliminate those distractions, and really get in the right mindset to tackle the market with confidence.
So what does an effective pre-market routine actually look like? Give us the inside scoop.
Well, there's no one-size-fits-all approach, of course. The best routine is the one that works for you and your lifestyle. But there are some general principles that apply to pretty much everyone.
Okay, let's hear it. What are those golden rules of pre-market preparation?
Well, first and foremost, start early enough so you don't feel rushed. It's really about finding what works best for you. Maybe you're an early bird who thrives on getting a head start. Or maybe you prefer to ease into your day with a cup of coffee and a quiet moment of reflection.
Right, the point is to feel calm and focused and in control, not stressed and frazzled.
Exactly. Now, once you've carved out that dedicated time, the next step is to create a structured routine that you can follow consistently.
So we're talking about a step-by-step process that guides us through all those key elements we've discussed.
Precisely. It might start with reviewing the overnight news and checking for any major market-moving events. Then you might move on to analyzing futures to get a sense of early market sentiment.
Then we dive into our technical analysis, identifying those key levels and potential breakout zones for the stocks on our watch list.
Exactly. And finally, you'd wrap up by reviewing your goals and limits for the day, making sure they're still aligned with your overall trading plan.
Okay, that sounds like a solid plan. But let's be real. Life happens. There are days when we might sleep in, or have unexpected things pop up, or just feel less motivated. So how do we stay consistent with our routine, even when life throws us curveballs?
That's a great question. And that's where those small habits and rituals can really make a difference. Think of it like an athlete's pre-game routine. They might have a specific warm-up, or a particular song they listen to, or even a lucky charm.
Right, it's about creating those mental cues that signal to your brain, okay, it's game time.
Exactly. And those little rituals can be really powerful in helping you stay consistent. Even when you're not feeling super motivated, it could be as simple as brewing your coffee in a specific mug, or lighting a scented candle, or listening to a motivational podcast.
So it's not just about the practical steps, but about creating an environment that helps you get in the zone.
Exactly. And another key to consistency is to make your routine as frictionless as possible. Eliminate any potential obstacles or distractions.
Okay, so how do we do that? What are some practical tips?
Well, one simple but effective tip is to prepare everything you need the night before. Maybe laying out your clothes, setting up your trading station, or even preloading your news sources and charts.
So when you wake up, everything is ready to go.
Exactly. No scrambling, no searching, no excuses. And another tip is to create a dedicated workspace that's free from distractions.
Right, because trying to squeeze in your pre-market prep while also checking email or scrolling social media is a recipe for disaster.
Absolutely. Find a quiet corner where you can just focus on your trading preparation.
So it's about creating that physical and mental space.
Exactly. And speaking of the mental game, There's one final element of pre-market prep that we can't overlook.
Oh, I'm intrigued. Tell me more.
It's about mastering the mental game, understanding the psychological factors that can impact your trading decisions.
Right, because trading isn't just about technical analysis and charts. It's also about managing your emotions, staying disciplined, making rational decisions under pressure.
Exactly. And that mental preparation
Hmm.
is just as important as any other part of your routine.
So how do we train our minds for success in the market?
Well, one of the most powerful tools is visualization. It's about creating a clear mental picture of yourself successfully executing your trading plan. Imagine yourself staying calm and focused, making rational decisions, even when the market feels chaotic.
Like a mental rehearsal before the big game.
Exactly. By repeatedly visualizing successful outcomes, you're basically programming your mind for success. You're building up that muscle memory. So when you face those real-time trading decisions, you're more likely to react with confidence and clarity.
So we're training our minds, just like we train our bodies at the gym.
Exactly. Consistency and repetition are key. Another powerful technique is positive self-talk. I know it might sound a bit cheesy, but how you talk to yourself can really impact your trading.
Right. It's like they say, whether you think you can or you think you can't, you're probably right.
Exactly. Instead of focusing on the negative, try to cultivate a more positive and supportive inner dialogue. Remind yourself of your past successes. Focus on the progress you've made. Celebrate those small wins along the way.
So we're shifting our mindset from fear and doubt to confidence and self-belief.
Exactly. And one final tip for mastering the mental game, don't be afraid to take breaks. Trading can be really demanding, both mentally and emotionally. So if you find yourself getting stressed or overwhelmed or just burned out, step away from the screen for a while.
Like hitting the reset button.
Exactly. Go for a walk, listen to music, spend time with loved ones, whatever helps you recharge and come back refreshed. Trading is a marathon, not a sprint, so taking care of yourself is crucial.
All this talk about mental preparation is making me realize that trading is about so much more than just clicking buttons and looking at charts. It's really a journey of self-discovery and self-improvement.
Well said. And speaking of journeys, we're nearing the end of our deep dive into pre-market prep. But before we wrap up, I want to emphasize one key point from our source material: the importance of practice.
Right. We can talk about all the strategies and techniques we want, but ultimately the best way to master pre-market preparation is to actually do it.
Exactly. And the best way to practice is to do it in a risk-free environment. Our source material specifically recommended simulator.com. That's SIMU-L8OR.com.
It's like a training ground where you can test your skills and experiment and build confidence before you risk any real money.
Exactly. And as you practice, pay attention to what works and what doesn't. Maybe you need to tweak your news sources, or just how much time you spend on technical analysis. Or maybe you realize that a smaller watch list helps you make better decisions.
The point is, treat your pre-market routine as an evolving process, not just a rigid set of rules.
Well said. The more you practice and refine your routine, the more confident and prepared you'll feel when that opening bell rings. And that confidence will lead to better decisions and more consistent results.
Okay, so before we say goodbye, I want to leave our listeners with one final thought.
I'm all ears.
We've talked a lot about the technical aspects of pre-market preparation, but I think there's a deeper layer here.
Oh,
It's about self-awareness. Pre-market prep isn't just about checking things off a list. It's about understanding yourself as a trader, knowing your strengths, your weaknesses, your biases, even your emotional triggers.
right. Recognizing those patterns in your behavior that might be holding you back.
Exactly. And once you identify those patterns, you can start to develop strategies to overcome them. Maybe you need to adjust your position sizing, or step away from the screen when you're feeling emotional.
It's about applying that same level of analysis and preparation to your own mindset.
Exactly. The more self-aware you become, the more control you'll have over your decisions, your emotions, and ultimately your results.
That's a great point. So as you continue to refine your pre-market routine, don't just focus on the external factors. Take some time for introspection.
Ask yourself, what makes me feel confident? What are my blind spots? The answers will help you unlock your potential.
It's about aligning your inner game with your outer game, becoming a master of both the markets and your own mind.
That's a powerful takeaway. It's not just about preparing for the market. It's about preparing yourself.
Exactly. So as you embark on your trading journey, remember, knowledge is power, preparation is key, and self-awareness is your secret weapon.
And on that note, that wraps up our deep dive into pre-market preparation. We hope you enjoyed it. and feel ready to approach the market with confidence.
Happy trading, everyone!